paints industry just got a shake-up, but not the kind you see on a wall. Asian Paints rose 4%, Berger Paints too saw 3% rise during Thursday's trading session. And the timing is interesting because major rival Grasim's paints division Birla Opus just saw its CEO quit. Rakshit Hargave has stepped down effective November 1st, 2025 as per a letter to the company's board of directors. Barely 18 months after launch, the man leading Aditya Birla Group's high-profile entry into the paints business is out. And the market is already reacting with competitor stocks like Asian Paints and Berger Paints riding a fresh wave of momentum. Now that's a twist because when Birla Opus first launched, Asian Paints actually fell. Even brokerages like CLSA downgraded the stock, citing concerns that the new rival would eat into Asian Paints' market share and profits. Competition was heating up and investors fear the paint giant's dominance might finally be under threat. But fast forward to now, the tables seem to be turning. Nomura has upgraded Asian Paints from neutral to buy, hiking its target to 3,100 rupees. That's about a 25% upside from current levels. So the same stock that once faced downgrades over Birla Opus is now being rewarded because of it. Rakshit Hargave will now be moving to Britannia as CEO from December 15. It's quite the switch from paints to biscuits, and it's happening right when Birla Opus was expanding rapidly. The company says it's now in 10,000 towns, running 140 depots and hitting double-digit market share if you include its putty business, which makes the sudden leadership change all the more striking. Now, it's not that Birla Opus is losing ground, it's that any whiff of uncertainty in a challenger can give the leader more confidence in its stride. And here's where it gets more interesting. Abhijit Roy, the CEO of Berger Paints, told CNBC-TV18 that the impact of competition will continue to keep reducing. Now, what does that mean? Well, the big paint makers are not losing sleep anymore. He also said Birla Opus is now stabilized at around a 900 to 1,050 crore rupees quarterly run rate, which sounds solid until you decode it. That steady revenue, yes, but also a hint that the hyper-growth phase might be cooling. And then came the kicker. Roy said Birla Opus can't discount further if they want to stay EBITDA positive. In simpler words, they can't keep slashing prices just to win market share, because if they do, they'll start losing money. So for Asian Paints and Berger, that's one less competitor playing the deep discount game. And as the dynamic shifts, Asian Paints finds itself in a sweet spot. Crude oil prices, which drive paint input costs, are at a 2-week low after US oil inventory spiked by 5 million barrels, the biggest jump since July. That means lower expenses and fatter margins for paint makers, a quiet boost Asian Paints did not have to ask for. Add to that, MSCI has increased Asian Paints' weight in its standard index, bringing an expected $95 million of inflows from global passive funds, as per Nuvama research. So between a calmer cost curve, new fund inflows and change in competition dynamics, it's been a strong week for the stock. All this just days before the company reports September quarter results on November 12th, where the board will also consider an interim dividend. So between leadership exits, cheaper oil and fresh fund flows, industry seems to be getting repainted in more ways than one. For now, rivals like Asian Paints and Berger Paints seem to hold the brush steady, but the real question is, how long can this fresh coat of competition advantage last? What do you think? Let us know in the comments below.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.